Shotty was smiling over here when you put up that defense is the best offense. He been telling that for
forever. Tell like you were supposed to dive into it 3 weeks ago, but can you dive into it now? Like 200% gains mean nothing if a person going to draw down 180. And for us in our community, we lose 100%. We're never going to come back to the market. But I think it's important on the advisor side. Can you talk about how important it is? Because if you lose 80% for a client, oh man, they're going to be all over Instagram. You know?
Yeah, no, it's true. And it's like, even for me personally, for all of us, me personally, I lost a ungodly amount of money, but you never lose until you take it out. But last couple of weeks, I lost a pension. I lost a firefighter's pension.
Yeah.
But you know, just wins and losses in this game. So I'm not really too concerned. But what I kept saying, and this is why it's important to diversify your portfolio and not have all just one thing, not just have all individual stocks.
Yep.
And this is why you got to be careful with options as well, especially short-term options, because it's not, my philosophy on it is that it's not so much if a company is a bad company or not. It's the time frame. The problem with short-term options, any option, but really short-term options, you put time frames on it. So like, we know Apple's going to come back. But if you got an April call, you might not have enough time. You're gonna run out of time. So that's the thing that's really like difficult. And that's what Bonawyn was saying. Like, if you really do it right, you don't need to have your whole portfolio. The reason why long-term investing makes sense is that it gives you time. Like investing, like the most important thing that you have on your side is time. But you could withstand all kinds of anything if you just ride it out. If you don't have time, you can make a lot of money, but it's like being in the league. Shot clock is against you.
Run against you. Yep.
No matter how good of a player you are, if you only got 2 seconds to make it from the other baseline to the other baseline, you're not going to make it. You're going to end up throwing a half-court shot, just hoping and praying that it goes in. So this is why it's extremely important to be intelligent and just to diversify. I mean, it's just a lot of stuff is common sense. But, you know, when we talk about losses and protecting your portfolio, so if you have $100,000 in your portfolio, right, and that 100,000 goes to 50, now that's a 50% loss. But in order for it to go back up to 100, you got to have 100% gain. So the losses hurt you a lot more than the wins. Because like one of our friends was saying, like, yo, he lost like 150,000 last week, and he said, I never made 150,000 in a week, but I lost 150,000 last week. So the losses,
and they come they come a lot
quick.
faster.
Yeah. So it's all a game of math. Like, once you really start to understand the math is a language within itself. I was just telling that to somebody the other day. Like, math is a language within itself. And once you really start to understand math, then you understand why the best offense is the best defense.
And it's kind of, go ahead. I'm glad you touched on the inverted indexes, because we spoke about it. But like you said, you don't stay in the inverted long term. You time it when you're going to get out, right? 10 days, maybe 15 days. And so even my brother had that question. He was like, well, how come the S-Dow is not gaining? And I'm like, well, the Dow is at an all-time high, right? The NASDAQ is down. So there's different indexes that you can. So the S-Dow was one, right? That tracks obviously the Dow. But PSQ is more for the NASDAQ. So if you're in the PSQ, that's an inverted index for that. If you're trying to do the S&P, SH is an ETF or an inverted index you can use for that. So knowing that, like, these are like the mistakes that I made, right? So we're telling you, because we've made the mistakes, and we're telling you, hey, this is what you should be looking at. So if you're looking at the Dow and saying, wait, I'm not making any money on this inverted index, well, that's the reason. The Dow Jones hit an all-time high today. The NASDAQ went down 300 points today.
And if you study nature, you can learn a lot from studying nature.
Yes.
Like forest fires, hurricanes,
avalanches.
Yeah, those are all nature's way of purifying itself. The problem with forest fires and hurricanes, unfortunately, is that human civilization, we live in places that we're not really supposed to live. Like, we're not supposed to live in Hollywood Hills and things of that nature, because that's not really, but it's good views, right? So what happens with a forest fire is that's how nature actually purifies itself and new life is built. So if you really understand that, then you know that pullbacks in the market is healthy, it's needed. So when you see a pullback in the market, it's not something to run away from. It's something that is part of an economic cycle. This is something I've been saying for a long time as well, is that we haven't had a down year in 12 years. Usually, at least once every 7 years, we have a bear market. We had the shortest bear market in American history last year, because we printed so much money. Eventually, and I hope it doesn't happen this year for my own personal sake, but eventually we're going to have a down year. So what happens if we have a down year and all of these people taking so much risk and over leveraging themselves? All right, think about how bad these last 2 weeks were. But at
they weren't bad. That's the crazy part.
Well, relatively. Yeah. But I mean, at some point, we're going to have a down year. So if you think your portfolio was hurt in 2 weeks, what's going to happen when it's negative? Like I came into the financial industry in 2007 when the stock market was down 40% for the year. 40%. Like people have short-term memories. They forget about that. Like we just are in a 10% correction. Imagine if the stock market is down 40% for 52 weeks.
Yeah. Because people look at it.
Yeah, it takes 20 months to recover. And at that time, housing market was weak, gas prices were high, commercial was messed up. I mean, the real estate bubble is going to pop at some point as well.
Yeah.
You guys have to get prepared.
Yeah, and you said another key thing, man. You said know your price point. And so know where you want to get it at. And most people don't do that. They play the guessing game. Like, right, I'm going to always drop, I'm going to buy it. But I gave a prime example, and we had this conversation when you bought QQQ. And I'm like, it's not at my point right now. I needed to drop to a certain point for it to get there. And I watched it run up. And I felt that. I'm sure people feel the same way. It's like, oh my God, it's running up. It'll probably never get back to that. But that's why patience is so important. So important. Because now it's at my point. I'm like, all right, well, okay, I got the range where I want to get in. If I see the momentum slide back up, I'm on it right away. I'm watching that chart. That's the homework, right? Like I'm watching it by the minute to see if it has an upward swing or if it has an upward momentum, because now I get to get it exactly where I wanted it. It took me 4 months and it was tough because I'm watching Shotty going, yo, man, you didn't get that QQQ, but I knew my patience
always comes back down. Yep.
I had to be diligent with it. And like, I've learned my lesson. So that's true, man. I'm glad you said that. I'm glad you spoke on that.
And I want to say one more thing before we go to questions, and I know we got a couple other stuff on, but it's crazy if you really look at it, because the Dow Jones actually hit the Dow Jones hit an all-time high today.
Yeah.
So the NASDAQ, it peaked at 14,175. Now it's at 12,609. So that's 11%. 10% is considered a pullback. 20%. Now we're in bear market territory if it goes 20%. So it's crazy that. And I said this, I don't know if anybody remembers me saying this, but I said this at least 3 times. I said, I think tech is overinflated. I said this during the summertime. I said this when Josh Brown was on. Yeah. I said this a few times. I said, I mean, it's just common sense, right? It's like when you see all of these tech stocks just performing at all-time highs, what goes up eventually has to come down.
Yeah.
So not to say that, long-term, do I think that Tesla and Apple and Google are going to be, no, of course not. But at some level, we had to see this coming. Like I said it, I'm on record saying, like, I think that tech is overinflated.
Yeah.
And now we see a rotation happening where the stock market is not down. The tech side is down.
Right.
Like NASDAQ
the opportunities in value. Yeah. Like if everything was at a high, we can't keep buying everything at a high. You got to go pick up some of the lower value companies and push those up, and then tech will slide back down and everybody will push tech back up. Like the thing, I think, go ahead.
Okay. I was going to say that there was opportunities, and there was plenty of companies that we've spoken about that you had great opportunities.
Well, I want to right now, because I'm gonna give you credit. You said this company a while ago. You said this company over a year ago, and you kept saying it, and I wasn't really too bullish on it. But all-time high today on fire, Disney. This is something that you said several times. And California is opening back up. They Disneyland, they're gonna start to open back up Disneyland, let alone the streaming services.
You wasn't rocking with it.
So this just goes to show you, like Ian says, there's never a bad market. It's just bad entry points. And when something is up, something else is down. Right now, tech is down heavy. Disney hit an all-time high.
211.
You want to talk about Disney?
Yeah, man. I mean, we saw it from the beginning, right? When we spoke about it on the podcast, like I think like the first couple episodes, when we talked about streaming and the power of streaming. So to watch everybody be home during the pandemic and knowing that they have plenty of content, they wouldn't create a streaming service if they didn't have at least 2 to 3 years of content. And so they maximize on the content. They're hitting numbers. Their competitor, the number one competitor, Netflix, it took them 10 years to build 100 million subscribers. They did it in 12 months.
Yeah.
So that type of revenue in 12 months is incredible. Now, most people know that Disney has parks and they have licensing and they have blockbuster movies. None of those things were included in their revenue, right? There were no movie theaters to go to. There were no parks to go to. Malls were closed. The vaccine is coming. Mm-hmm. People go back outside. Disneyland is.
Yeah, here's the crazy part. They don't even have a lot of great content yet.
And that's the thing. The signs are all pointing to extreme growth, right? You know they're going to put billion-dollar movies out. They've done it for the past 5 to 7 years. You know people are going to go back to Disneyland. 35% capacity in California right now. It's coming. It's now added to the streaming.
I'm gonna tell you something too, as far as like just traveling around the country, going to Atlanta, going to Miami.
Atlanta,
the world is opening back up. The world is opening. The world is opening. I saw things in Atlanta that
Atlanta is never on ETF,
but I would never see. It's hard to explain what I saw this weekend in Atlanta, but as an observer, no, it's open and like I never saw this many people in a party in my life, let alone in the middle of a global pandemic. I say that to say,
be safe.
Well, yeah, first and foremost, be safe. But they're ready to go. When you see the governor of Texas say it's over, so 100%. We can debate this whole. I'm not here to debate if it's healthy or not, or if that's a different conversation for a different day. What I'm saying is that this world is opening back up. It's gonna open up, and by 2022, the floodgates is gonna open. All of those situations is gonna be a go.
And this is why we spoke about this. And Ian, I know you remember. I said Live Nation. I said Live Nation. You're killing me for saying Live Nation. People have been killing me for a lot of like the DraftKings thing, Disney thing, but the Live Nation was like.
How could they argue with it? The world's not gonna be closed forever. And for entrepreneurs, you have to learn too, even in moments of extreme pessimism, if you go look at Jesse Livermore's story, if you go look at the last recession or the Great Depression, there were a lot of people that became millionaires during that cycle because of the same reason. So even when there's a lot of disaster, there's always opportunity there if you can find it.
More money in the drought.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop. Bag drop.
Bag drop.